All right, we're back for another episode of the Mortgage Broker Podcast. And today, very excited to have Rob McLister join us from Mortgage Logic News. Rob is the founder of Mortgage Logic News. He has a pretty incredible journey in the industry from the perspective of just how he found the industry and ultimately what led him to being a writer in this space and ultimately becoming probably one of the most notable writers in our space today. We are at a Better Way Mortgage Group subscribers of Mortgage Logic News. A lot of our agents are subscribers as well, and we find his content, honestly pivotal to our business and the decisions that we make and the marketing and the way we communicate to our team and our clients and our referral partners. It's been a massive resource for us. So part of why we were so excited to have Rob on and just share those insights, but more importantly, jump into just how we can leverage this tool and this content for maximizing our ability to not just market but be leaders and experts in our field. And so again, really looking forward to jumping into this. I think you're going to really enjoy it, and I'll pass it off to the guys now. So Derek Williamson, my partner, is also joining me on this episode, and of course Rob, our featured guest. So hope you enjoy. Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by a Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with a Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right. We're back for another episode of the Mortgage Broker Podcast, and today we have the pleasure of sitting down with Rob McLister, the founder of Mortgage Logic News. And Rob, thank you for joining us. I'm going to pass it off to, just introduce yourself. And again, we just want to say thank you for joining us because what you do for our industry is definitely a huge value to us, and we want to highlight that to the rest of our listeners today.
Yeah, very kind. Thanks for having me. I always enjoy these. These are fun. So looking forward to your questions.
So Derek's with us as well. So Rob, why don't we just start there? Maybe a brief introduction to yourself, kind of your history in the industry, and ultimately what led you to where you are today with Mortgage Logic News.
Yes, started in 2006 and a half, and my wife got into the business, Melanie, and I was trying to figure out ways to get her more deals, and so I started writing this blog called, you might have heard of it, Canadian Mortgage Trends. And it originally was a site for customers, to try and get folks to read my stuff. And hopefully if they had questions, talk to my wife. And, it worked. But eventually we evolved into a news site for mortgage professionals. And ended up doing that for a number of years. Then we sold to Mortgage Professionals Canada. Then I started really focusing more on the mortgage business and started a rate comparison site, ratespy.com. Ended up selling that. And, after 2021 or so, I had a non-compete. I really had nothing I could think of doing other than going back to writing. So we started mortgagelogic.news. It was a site designed to help mortgage professionals come up with more ideas to give better advice to customers, close more deals, a lot of marketing stuff, strategy stuff, using all the 17 years of writing experience and market experience that I had, and really giving people kind of an inside view on as much stuff as I could get, and cutting edge interviews, all that stuff. Really stuff that you don't see in the mainstream media, and boiling it all down. And there's all kinds of models that we could have gone with. We chose a subscription-based model. Number one, because, I have a mortgage too and I got to pay it. So free was a kind of a tough road to hoe. But more importantly, we can limit the folks that can act on the information. I think there's a lot of value to that, because you write something in a the Financial Post, for example, a strategy, and tens or hundreds of thousands of people use it, it can get watered down. And so for mortgage professionals, mortgagelogic.news is a very exclusive group. We have hundreds of subscribers, but relative to other publications out there, it's a very exclusive group. So that lets me kind of share things that don't get watered down in terms of marketing strategies and tactics and whatnot. And it lets me, behind a paywall, lets me say things that I would never say if I was writing for, say, Canadian Mortgage Trends or Financial Post or something like that. So, I can, I can have a lot more fun with it, and we tend to get a little irreverent every now and then, and yeah, it's just a lot more enjoyable to I find right behind a private paywall.
Yeah, I love it. I mean, I'll just add my comments on this, and I read every single one of your emails as quickly as I can, and there's a lot of them. I truly don't know how you do what you do or how you do it so quickly, but it's very impressive. And just to your point, I mean, I think if any brokers listening to this is not on Mortgage Logic, I strongly recommend that you check it out. It's unbiased information, which I think is very important in our industry in today's age. There's so many different networks and people pushing their own narrative, and Rob really comes at it from a different approach, which I can appreciate. And to the point of communicating with partners, clients, it's easy for we train on this all the time. Like, you should be communicating with your referral partners. You should be communicating with your clients constantly. But what are you putting out there, and is it quality content? And I think that's where the challenge lies. A lot of the time is people are ready and willing to do so, but they don't have the content readily available that they can push out, or when they're researching, do they know if it's actually correct? And you go down that rabbit hole, and then the project doesn't get complete. So anyways, there's a lot of value in what you do, and greatly appreciate it.
Thank you. And more and more now, there's the information overload is insane. And so we try to help people focus on what really matters and drives business. And you guys know as well that the AI generated content out there is proliferating at warp speed, and there's just so much duplicate content, and just blah blah blah, that we really try to keep things concise, and show brokers and lenders ideas that are actionable.
Yeah, no, I definitely see that as well. And like, to Derek's point, I do read every email, and it is, at times it definitely is a bit jaw dropping, just in regards to how much is coming out. And for me, I look at that as like, okay, how am I best leveraging this? Because there are, a number of use cases, and I want to get into that shortly here, but maybe just before we jump into that piece, like, what would you say are the most pressing trends today in the mortgage industry that you find yourself writing about? And maybe we can just discuss some of the challenges and opportunities that maybe brokers should be aware of when it comes to pressing trends.
Yeah, I'm a rate guy. I just find rates fascinating, and kind of the whole rate competition angle. And so, I had a rate comparison site for many years. And so the competition right now in rates, I've been watching this for 17 years. I've never seen anything like it. And the competition, and this is something that I talked about, like 5, even 10 years ago. It took a lot longer, I think, to get to this point than I expected, but nonetheless, the banks, in terms of uninsured pricing, the competition we're seeing is unbelievable. And in terms of insured product, the online brokers, they have to sell insured because they can't get branch beating uninsured pricing many times. And so you have these two factions that are just making the market margins tighter and tighter as we go on. And I didn't think that margins could get much tighter than they were a few years ago. But just the pricing, just the underwater pricing, that I'm seeing from banks that have moved to a cross-sell model is just amazing. And so, it kind of started with HSBC in 2016. They came to market, and they just posted some just, world beater rates, and their game plan was to sign you up sell you other stuff, investments, credit cards, whatever. And banks have been doing cross sell forever. That was not new, but the degree to which HSBC discounted its public facing rates, and we're not talking about discretionary behind the scene rates, we're talking public rates, was just relatively unmatched, at least from the consistency they were doing it. And so the big banks, I think, saw some of the success HSBC was having. I mean, they were successful. They got bought out by RBC. So they were making a lot of headway. Now they are still only, I think, 2% of the market. But when you're an RBC or a TD or something, you can kind of take those strategies and magnify them a lot quicker. And so, long story short, the competition that we're seeing is just insane, and that requires brokers to be very creative with respect to how they sell. Because you're not, back in the day when I started 2006 or 7, we consistently had rates that beat the big banks, and we can't say that anymore, at least on the uninsured side. And so competition is a huge one. And there's non-prime. That's another area where I think there's going to be continued growth as regulators push people out of the prime market into the hands of Alt-A lenders and a little bit down the credit curve, and that's a challenge too, because you can't go on a rate comparison site and advertise a 4.09 5-year fixed rate and get non-prime customers. So where do you find these people? And so that's, this year, helping folks, find non-prime opportunities, non-traditional lending opportunities, I think is a big part of our focus, and helping people digitally market, relationship market, do online webinars, optimizing their websites to get those customers. That's a big focus for us at MLN this year.
Yeah, I couldn't agree more. Every single broker that I'm speaking with, I'm letting them know, like, if you're not very involved or you don't have a lot of knowledge on the Alt-A, B private space, that needs to be your main focus for 2025, because that is the one, and reverse mortgage, I should also throw in there, which is rapidly growing. Those are markets that we have access to that we don't have a lot of competition outside of internal competition with other brokers, right? Again, and I think a lot of brokers have not focused on that because they haven't needed to your point, right? We've always had competitive options on our side. So I completely agree with you.
Yeah, I mean, reverse mortgage, there's just so much opportunity there. Still got a bit of a stigma, but folks, the debt ratios are really never going to improve significantly in the near term in this country. And so folks are getting to a point where they don't have enough saved for retirement, but they got lots of equity. And, so and maybe they want to help their kids, with a down payment or whatnot, and they have no other way to do it besides tap into that equity, but they don't want the payments. So there's just so many aspects to reverse mortgages that are, money making.
Not to mention brokers get paid double.
Yeah, exactly. Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show. What you just mentioned, like brokers get paid double. So, obviously a good piece to focus on from a compensation margin perspective, which to your point earlier, the margins are smaller than they've ever been before. I mean, you've obviously seen a lot more being in this industry longer than us, but, also back to your point around competition, we've never experienced this type of competition with the banks that we actually have in our channel as well. And just going back to some of the stuff that's gone on with, TD Bank and branch, losing deals to the branch, and now starting to see that with Scotia as well. Given just that increased competition on the prime side, especially in uninsurable, do you see that changing at all? Like, do you see that, this wave maybe coming back to more of an even playing field, or do you see it increasing?
It's really hard to say. I don't believe that it's, the anyone's ever going to be able to have the same funding costs as a major bank. No, I think that open banking is an interesting development. And so someday, I don't know when that's going to be. Maybe it's a few years, maybe it's 5 or more. There's going to be a time where banks have to compete far more aggressively on deposits. And so, if you got money, like there's, in the US, for example, there's, a lot of places where you can go. You can just park your money into a checking account and get 4% interest, and that's pretty good. And people want that, but there's not many options like that in Canada. Someday there will be, and when that happens, banks are going to have to compete a lot more aggressively. They're not going to have the same cost of funds they have today. I mean, obviously, the percentage of folks that are willing to accept 0% or 0.1% on their money, their deposit money, is just going to keep going down and down and down. And when open banking and other technology make it so easy to, click a few buttons, be authenticated, move your money at light speed to another provider, that's going to be a game changer for banks. And so you'll see, I think, the difference between what smaller institutions pay for deposits and what the big six pay for deposits. You'll see that spread shrink over time, and to an extent that has the ability to level the playing field somewhat. But banks are always going to be banks. They're always going to, our big six are always going to dominate. I don't see any challengers coming. You could take, JP Morgan Chase in the US, bring them into Canada. They're still not going to make a dent. Look what HSBC, one of the biggest banks in the world, like I said, only 2% market share. So our big banks have a stranglehold on deposits and lending and financial services in general. That's not going to change for a long time. But I think, the smaller, the key again is cost of funds. And I think that spread will improve for bank competitors in the future.
Yeah, I couldn't agree more. All right, let's just move on to maybe where can a broker really leverage and maximize a subscription to Mortgage Logic News? I mean, we'll touch on a couple things that we found useful for us and some of our agents, but what are maybe some tips you have for brokers to get the most out of their subscription and really, start to find some potential deals in their pipeline?
Yeah, so it's really two things. So it's first of all is improving advice. And how do you do that? Well, you learn what history has taught us with respect to term selection at playing rate cycles. You understand where rates could go using objective sources, not your neighborhood economist, but the market overall, and you kind of plot where rates could go if the market's right. We know the market's very often wrong, but generally speaking, it's not too bad in terms of direction. Rate magnitude and timing, it's not good at. But in terms of direction over time, if you can, harness what the market's telling you, and then, use, spreads between the base case of what the market's telling you in terms of where rates are going to go, and, increase by say 150 or 200 basis points and decrease by 150, 250 basis points, that potential rate path, you can help folks understand where, okay, well, if the market's right, and nobody knows more than the market in terms of where rates could go. Well, if the market's right, this is the best term for me today, based only on interest cost. And then you have to dive a little deeper and figure out the person's 5-year plan and all the other stuff that determine which term is best for them. But if you can at least get a kind of a base case of where rates might go and what term might be best for them based on their borrowing time frame, then that's a very important start. And then again, you figure it's all about risk management as well. So you got to figure out, well, if the market's wrong by 200 basis points, then this is what could happen to your variable rate or your 3-year fixed at renewal time. And if the market's wrong and rates go much lower, this is what that 5-year fixed might cost you. And so we make that possible using a tool called amortization simulator at Mortgage Logic, and it's by far our most popular tool on the site. People use it all the time to print out charts and help clients. And in fact, a lot of folks do online presentations using the amortization simulator to show clients in real time what could happen to their 5-year fixed or their variable or 3-year fixed if the path for rates deviates from market expectations. And that's really popular because no bankers are doing that. In fact, 99.9% of brokers are not doing that. And it adds tremendous value. And the other thing is keeping customers and referral sources informed. And so, a lot of folks CRM programs send out garbage, barbecue recipes or, vacation ideas, stuff like that. It's crap. I mean, what you need to do is send people stuff they can use, stuff that'll save them money. And so that's what we focus on. We have a thing called the Mortgage Command Center that lets you print out customized charts. It's AI based, so you can print out virtually any chart. We have hundreds of data points that you can use. And these are custom, attractive, professional charts you can pop into emails and create a story. And it gives you lots to write about. And so, whether you're emailing people monthly or quarterly or what have you, it gives you an edge because you're giving someone insight that they never would have got anywhere else. And so, yeah, those two things I think are the most important aspects of the site.
Yeah, I mean those are key items. I was just sorry, Dean, I was just going to say, if you go back to 2021, 2022 when rates went up, I think a lot of brokers and consumers, for that matter, have shell shock from that. And I think a lot of brokers are scared to talk about rates and predictions and what might happen. And I think a lot of people just take the approach of like, no one has a crystal ball. You got to do what you think is right. And here's kind of what I'm seeing as of today, which, that's not the wrong approach either. But to your point, 95% of brokers, bankers are not going this in depth. They're not able to explain the minutia to their clients. So, if you're talking about a client potentially bouncing around to different banks for rate, maybe this is your selling feature, right? Because you know more than the broker down the street or the banker down the street. So educating yourself on the market, like you said, and actually being able to speak to it. I mean, at the end of the day, that's why consumers go to a broker or banker. They want to be educated and they want to be somewhat told what to do, right? Or at least given the information so that they can make an educated decision. So I think that's really, really important.
Yeah, people want certainty. And, how do you get certainty? Well, you have to make certain assumptions about the future. And, if you plug in the numbers and you see that your $400,000 mortgage payment could go up 35% when it renews in 3 years, maybe that changes your mind. Maybe you're risk averse. Maybe you lock in for 5 years instead. And so at least you give people sensible, realistic, outlooks, and you're not just, pulling things out of your, what.
Yeah, I mean, a couple points that come to mind here, like the arming yourself with this type of education to actually know what you're talking about when speaking to a client goes a long way from building trust. And I've definitely noticed that, like, by consuming this type of information, I mean, I'm somebody that goes in and consumes as much as I can in the industry, but this as the go-to resource for me has been super powerful from that perspective, is I actually do build trust when having these types of conversations and utilizing information that I'm reading on a weekly basis to help me sell that trust. And I think that's a big one that I'm glad you brought up. But the second piece too is just like, you think about what you're emailing clients, and you mentioned like these recipes and house cleaning tips and all this crap that what is largely what a lot of these CRMs are pushing out. I find consumers today are far more educated than they ever have been before, and I feel like they see through that type of content in a much more of a cringy way than ever before. And when you actually come out with proper advice and content, I feel like, just on my experience alone, it's going a lot longer. And we're definitely seeing, we've been subscribers for quite some time now, but we've taken an approach to actually go a little bit deeper and really start to get longer form type blogs and whatnot pushed out to our database, and our open rates going up. And we've actually had responses like, wow, that's some great great advice or great content where, maybe in the past when we didn't put that much time or effort into it with having this type of resource, we didn't get that. So, just with that, like, do you get much feedback from brokers saying like, hey, this really worked well, or thank you for that, like, thank you for this piece, or is there anything that really stands out that just from broker feedback or subscriber feedback that is really working?
Yeah, people love history because they believe that history could repeat. If you tell a story with your history, this is what happened in 1999 when the internet was in its infancy and GDP was growth was going up and inflation was going up, and you create these analogs, right? And you tell the story and compare it to today. I mean, that really catches people's interest. And so, and this is, if you're sending out content to folks, you really got to try hard because they're getting bombarded with so much junk. And it's little things. It's like your headline. Like I could write a story for the Financial Post that gets 10,000 readers, and I could change the headline and potentially get 100,000 readers. Like, little things like that, like the headline, the first lead sentence, stuff like that. I mean, this is, these are business techniques. You're trying to convince folks to read more of your content to make you that authority, get to the bottom where that call to action is so that they click it and say, hey, listen, I want to refer you to, my neighbor or my brother or something like that. I mean, and, there's so much to email marketing. And, it starts with the content. It starts with the subject line in the first few sentences. And you got to summarize because people don't want to read, 1,000 words of text, and you got to use lots of pictures and lots of charts, and and you got to make it fun. A couple of years ago, I realized that my content was valuable, but it wasn't fun. And I'm like, if I was looking at this, would I pay X dollars a month for what I'm reading right now? And I'm like, I think that if I can make it more entertaining and keep people interested and not, just write the same thing that I've always been, writing in the same fashion, that I could, magnify subscribers. And it goes with applies to mortgage customers as well. Like you got to make things, people have such, goldfish attention spans these days. You got to make things fun to read and interesting and provocative. It really goes a long way.
Especially with the topic of mortgages, because it can be a little dry. So emphasis on that.
Is there any unique industry insights? Like, are there that potentially could empower brokers to succeed today? Does anything come to mind that, maybe, sharing something that's maybe less obvious than what, from an opportunity perspective for brokers to maybe jump onto here?
Having the right historical perspective, like I mentioned, is really important because, history never repeats exactly. Very often rhymes. We've heard that. And data comes from the past. And so knowing history and how rates have reacted in the past to certain stimuli, like tariffs, for example, making things timely, and, inflation not coming back to the target as fast as central banks expect, fiscal irresponsibility that creates more bond issuance and more credit concerns. How has that type of stuff impacted rates long term? To get those answers, you got to know history. And so that's, we write about this stuff all the time. We just wrote a piece this weekend about it. And so making data-driven decisions, I think, is critical. And, if you're a mortgage broker or a lender, helping your customers understand the data so that they can make those decisions is essential. And, again, like I mentioned earlier, mortgages are largely about risk management. So understanding how to limit risk if rates run against you, knowing which points signify when rates are running against you, It's like kind of like trading stocks, cutting your losses. If you're risk averse and you're in a variable, and you see, inflation shooting up past 3%, and you see all these fundamentals driving GDP growth and all kinds of stuff, like we saw in the early 2000s. You have to make a decision, and so understanding the variables that go into those decisions is essential. And we talk about bond yields all the time, and charts, and we have the Mortgage Command Center that gives you like a single page view of all the key economic metrics that you need to really understand where we are in the rate cycle. And breaking that stuff down for customers, and making it consumable content is very important. And so data driven decisions, I think, are one of the biggest takeaways from this whole discussion, I think, today, because there's a lot of mortgage originators out there that just fly by the seat of their pants. And if you can help folks understand the right moves based on what's worked in the past, and you disclose that the past is not foolproof, and help them manage risk, I think that's really important.
Yeah, really good points. And I mean, it's all very timely with, having gone through the drastic increase in interest rates, which, I've been in the industry for about 12 years and I had never seen anything like that in my career, nothing even close, right? Rates rarely moved in the first 10 years of my career. So dealing with that it was new, right? And it was new for a lot of people in the industry to deal with that. I mean, people joke about it, but the difference between an ARM and a VRM product, right? Like, and the amount of brokers that didn't explain that to clients properly, like, huge flaw in our industry. So I couldn't agree more. Now we're getting back to a point where rates are reasonable, if you want to call it that, and maybe markets will start to pick up, and but it's still volatile, right? So preparing yourself for that and having those conversations up front, I think, is key. And again, I just the driving point of all this for me is, how are you going to stand out compared to all the other brokers? And really, education is it, in my opinion.
Maybe what we'll do here is just start to look to wrap up. And I think one thing that would really interest me, and I know our listeners would like to hear this, is what advice would you give mortgage professionals today, navigating everything that's going on in today's industry, especially somebody that's maybe entered the business in the last, say, 1 to 3 years?
I think a key is challenging the orthodoxy and learning how to sell strategy. There's this unwritten rule some people have that I got to pay down my mortgage as fast as humanly possible, and that's fine. Some folks are just programmed that way. They need to have the certainty of having no debt. But if you're willing to take a bit more risk, very often accelerating mortgage payments is foolish. Some folks, I see them making a mortgage prepayments, and they have like a 9% car loan or something like that, or they haven't filled up their RSP, and they're just throwing away that tax refund and that tax deferred growth, which can be significantly more than your mortgage rate when rates are lower. So taking advantage of a time value of money, something that a lot of folks don't understand. So again, you have a lot of borrowers out there programmed to think 30-year amortizations are evil. I should be in 25 or less, or 20 or 15. But payments become cheaper over time. Thanks to inflation, income rises, and mortgage payments stay fixed. Unless you refinance or move into a more expensive house. But the point is that many times you're better off paying that mortgage with future dollars and taking those current dollars and putting them to work someplace else. And this is, there's endless material on this that you can go on the internet and educate yourself to learn. We've written a lot about it at Mortgage Logic. But strategies and challenging the orthodoxy, I think, are important. And we talk about rate competition. Oh man, there's banks that are beating brokers by 25 basis points, 30 basis points or more, depending on the term and the given time. But the bank can beat you by a quarter point on rate. But if you have some, ignorant newbie mortgage advisor at XYZ big bank telling you to take a 5-year fix when this point in the rate cycle dictates a shorter term or a hybrid or a variable, that quarter point could cost you a point, easy. And so I think it's really important to stress how crucial term selection is. And there's really nothing that's more important in terms of reducing your overall borrowing cost. Maybe amortization, if you can afford to make more payments on your mortgage, that'll get you to your mortgage burning party quicker. But other than that, a term selection is essential. And there's just the big banks just do not have the training programs and the experienced mortgage professionals to help folks really dig in to history and to the numbers and to the forward rate outlooks to figure out which term is most appropriate today based on interest costs. So here's an idea that that's probably my best idea for mortgage pros today.
Yeah, it's a good one, man. I really appreciate this, Rob. This is some good stuff. I mean, just to maybe recap a little bit, your inspiration and evolution of Mortgage Logic News was great. So I appreciate you sharing that. And I mean, we definitely touched on some good, some really good value from a perspective of how to leverage this subscription, how to just position yourself as a leader or an actual expert in this field, opposed to, like you mentioned, some of the guys that just walk in here or girls that walk into this industry with really no education at all and just, all of a sudden are a mortgage pro, right? So positioning yourself as an expert with actual knowledge and education, and this is a go-to resource for us, and we highly recommend it for any of our listeners that are not subscribing to Mortgage Logic News now. And with that, maybe you can just share like the easiest way to get a hold of you, get tapped into this subscription. What is kind of the best next steps for somebody listening that doesn't know who you are or MLN?
Yeah, go to mortgagelogic.news. Mention that they're associated with you guys. We'll set them up on a free trial, no risk. That's it. My email is robert@mclister.com, first name at lastname.com, if anyone wants to reach out directly.
Awesome. Yeah, I appreciate this very much. And, we'll keep on reading as we always do. Derek, any final thoughts you want to share? Or?
No, I appreciate it. It's nice to get you on camera here. I know there's a lot of people that read your emails and probably don't know a heck of a lot about you. So really appreciate you making the time and keep the content coming.
Yeah, this is fun, guys. And I'll leave you with one last little nugget. I've not too long ago, I discovered the probably much later than you guys or other folks, but the importance of keeping things personal. Right? Like everything's numbers, internet based. You're on your phone getting all your information and you're not talking to anyone. I discovered one-click video meetings, and in terms of my business, it's made a world of difference. So I would encourage mortgage originators and even lenders, that do these BDM meetings to look at these one-click video meetings. I think those are awesome. And the video emails. People don't like to read; they like to watch. And so, whether it's Bomb or any of the other ones out there, one-click video meetings and video emails are so essential, I think, to creating a relationship with customers that I think everyone should be using them. So, I just thought of that. Sorry, it's even though it was the closing there, I wanted to drop that in.
Yeah, I love it. That's a great tip. Couldn't agree more. And thank you very much, Rob. Like we said, we'll keep reading and appreciate you coming on, and hope you have a great day. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.